I cannot show now. Okay, some teething issues. We'll start. So, welcome to CMA Part 2 sessions. I'll be your trainer. My name is Bala sir. Okay, you can call me Bala sir. Okay. Now, I'm sure most of you know, all newcomers know what is CMA. Yes, Part 1, Part 2. Orientation is done. No? Absolutely no idea. Part 1, Part 2. Huh? Inside there are 12 sections. Okay. So just let me just go through and finish the formalities, and then we'll start with the part 2. So CMA means what? CMA stands for Certified Management Accountant. You are going to be studying a US syllabus. This is a US exam, and Certified Management Accountant is a golden standard certification standard. India also there is a CMA. In many countries there is a CMA, but you are going to be American CMA. So what is its basic things? Let's finish. When you joined this CMA US program, what is in your mind? What is CMA will do after you qualify? What is it you will do? Day to day job. Hmm? What is a management accountant role? Okay. What is a management accountant when you become management accountant? What is the role you will be looking for? Is the analyst. Hmm. We'll be talking about why behind the numbers. Uh, we are not uh, traditional accountants. Who is a financial accountant? They are experts in bookkeeping, journal entries, debit, credit, all those things. Yes, Abhekta, correct. So, uh, as a management accountant, you will be looking into why behind the numbers instead of what are the numbers, and you will be creating values in the company with our decision making power and our recommendations. Those numbers will become actual numbers later on. So, as a CMA, we are going to talk about future. Futuristic accountant. Uh, what will be the numbers and how do we create the numbers? Numbers means it can be anything, profit, wealth, all these things. With our recommendations, if the business leaders use this information, they can create a value for the company. So, ours is a value creating job. As a CMA, your decisions are important. Once we think about tomorrow, and those value creation numbers actually become a numbers in profit and loss account, in balance sheet, that is what the traditional accountants do. They prepare these financial statements. So this is our brief role. As we start our journey together, we will talk about more and more what will be the significance of your role. How do you contribute as a CMA? uh, of course, you will be an insider. Inside the organization, you are a business partner. You will be helping your business leaders to create numbers with your decisions. So you are not a public personality, like financial accountants, CA, CPA. They have a power to sign the balance sheet, but CMA doesn't have. But apart from financial accounting, you will study financial accounting also in CMA Part 2, Part 1, sorry. And because once you become a finance manager, you should know what are these numbers and how is the US framework. you will become expert in that in part 1. So basically, as a management accountant, this is your role, and especially when we start part 2, you will be enjoying the same role 100%. What you study here is entirely CMA, except in CMA part 1, where you will be studying some accountancy, journal entries, debits, credits, because as a finance major, you should know how your accountants are preparing the numbers. Apart from that, everything what you study here is the core CMA functions, core futuristic accounting. Okay, this is the brief about. In every country there are two professions. One is, in India for example, financial accountant is CA, and in India cost and management accountant is said instead of cost accountants. When you go to UK has its own CA, and its management accounting is called CIMA. Have you all heard CIMA? CIMA, Certified Institute of Management Accountant. When you go to US, financial accountant is CPA. Have you all heard CPA? Certified Public Accountant. And right now you are starting your journey on CMA, Certified Management Accountant. Among all the countries, any qualifications with a prefix of American is the most demand in the world. As a CMA, US CMA, you will be generally, you can start your own entrepreneurship. You start working in Big Four, you start working in multinational companies. Over the years, your career span, your entry level job is, you'll start as a financial analyst, then you will grow as a finance manager, then you will go as regional finance, like that. In next 30-40 years after you get the first job, you can reach the level of CFO. What is CFO? Chief Finance Officer. That should be your goal. Okay, so with that, let's start this journey. And as far as the exam thing is concerned, US CMA exam is having two parts, part 1 and part 2. Both are 4 hours non-stop computerized exam. But within that part 1 and part 2, you will be having 6 sections. 6 sections means there are 6 mini papers. Okay, 6 mini papers. For example, let me just show you what is it up for you. Okay, so this is part 2. We are going to start. In part 2, there is a 6 sections, A to F. This A to F is like a mini papers itself. So in part 2, 6 papers, in part 1, 6 papers. So altogether 12 papers, but 2 times exam. 4 hours continuous exam non-stop. In that, first 3 hours is 100 multiple choices. And when you go to 4th hour, there is a condition. You should do extremely well in first 3 hours, 100, hard not to crack multiple choices. And once you go to 4th hour, it is called case-based study questions, 2 case-based study questions and all. Exam strategies and all, we'll talk about that later on. Now, brief. Can you all open the notebook, fresh page, write down all these things? Write down. CMA Part 2. Online people, write down. CMA Part 2. Strategic Financial Management. Just like here, write down part 2, strategic financial management, in bracket 4 hours exam, consisting of 100 MCQs, 100 MCQs in first 3 hours, and 2 case-based test questions. No more it is called essay, it's called 2 case-based test questions, CBTQs. CBTQs. In fourth hour. Of course, later on I will not scare you today. To go to fourth hour, just to understand, you need to do extraordinary in first 3 hours. I'll talk later on what is the scoring and all. Write down section A. Financial statement analysis. Dash 20%. I'll tell you what are those things. Next, section B, corporate finance, 20%. Section C, business decision analysis, 25%. Section D, enterprise risk management, 10%. Section E, capital investment decisions, 10%. Section F, professional ethics, 15%. Okay. Now, what is this percentages? On top of the percentage in that column, you write weightage. Okay. So, weightage means approx. You will get around 20% questions from A. Section B 20%, like that. Approximately, not guaranteed. And all the questions will come to you like a googly bounces, not necessarily serial. First 20 questions you will get from A, next you will get from B. No, anything you will get it randomly, 100 multiple choices. Each one of you will get a different set. There is no fixed questions. Okay, that's the beauty of this exam. That means what? This exam, 6 papers you are writing one time. In part 2, 4 hours, 6 papers will be tested. Okay, so that is why studying is 1000% you have to study, but you can expect this much percentage of questions. Okay, now biggest section is section C. It carries a lot of weight, and when you see these sentences, the titles of this section, everything what we talked about is future, future, future. Now, in financial statement analysis, when we start now, analysis, you're not going to prepare financial statements. You're going to talk about story, story behind the numbers in the financial statements. Analysis you do. You tell the story to your management, to investors, etc., etc. In corporate finance, from finance manager level in a local subsidiary of American company to the CFO level, how do you handle the finance management in day-to-day job and everything thinking about future, how to raise money, whether from shareholders, whether from lenders, how to manage working capital. What is working capital? Hmm? Working capital. What is working capital? Super. On a day-to-day basis, you need money, right? And then long-term finance management means highest level finance management you will do as a CFO. So again, it is a futuristic. As a finance manager, when you come every day, you should think about next week. Next week, how to fund the salaries. Next week, how to pay government taxes. Next week, how to pay my vendors, suppliers. From where the money is coming from. All these things you will do in section B, which is a technical section. You will be learning about international finance markets, in particular US finance markets. And then in section C, as the name itself suggests, you will be a business partner. You will be recommending. You will be recommending decisions in the long term, which will become numbers later on. Section C, Section E is like that. They are similar, but beautiful things you will do. That is the contribution of CMA. When it comes to Section D and F, they are 100% technical theory. Now, D is around 10% and F is around 15%. Write down. Section D and F. Write down. Section D and F are 100% technical theory, okay, that means there is no numbers there, no numerical. In other sections you will enjoy the theory and also numerical. In right now when you get the resources, I always advise on the first day only, section D and F you should just browse through what is the topics inside, what is it. So when I come to section D, you little bit you have an idea of what is that I'm talking. Okay, so from now on, have the habit of just going through section D and F. Is it clear, all online people? Swati, Sheta, Tanmay, Ananya, Riddhi, Abhyakta. Are you all taking notes? Okay. So this is the brief about part two. Now we'll just do some small quiz before we enter into what is this financial statement analysis. First of all, you will become American CMA. That means you should know under US GAAP. What is GAAP? Have you all heard? What is it? GAAP. Not heard? What is it? Heard only. Heard. Madam? Of US, correct? This is the accounting framework in US. Internationally, what we follow? Opposite of GAAP framework. Internationally, IFRS, International Financial Reporting Standards. So anyway, in CMA Part 1, Section A, you will prepare financial statements, you will understand the GAAP rules. But right now, when we start Part 2, Section A, analysis, already prepared financial statements, we are going to tell the story. We have to we will do that some basic analysis. We will do ratio analysis around 35 to 36 ratios. You will not only calculation, interpretation, and telling the story to your management, your business partners, investors. You have to change the cap to whom I am speaking to. That is very important in financial statement analysis. The already prepared numbers are there. You should analyze them further. Analyze them further. What is financial statements set includes? When we talk about financial statements, what all it includes? Go ahead. Profit and loss, balance sheet, equity, cash flows. So these are the main, but when we are talking about all these financial statement analysis, we'll be analyzing this, comparing this year to last year, comparing our performance to the nearest competitor. That is called industry average. The industry in which your company is working, that industry ratios are how much, and our ratio is how much. And you should have a good control. Not only telling story, you should also manage them. Okay, so mainly profit and loss account or income statement. American term is income statement. When we say balance sheet is still a popular word, but it is called statement of financial position. Then statement of equity changes to equity, statement of cash flows, etc., etc. But in part 2, section A, where we are now, we are only going to talk about numbers. Why is like that? Why is like that on income statement and balance sheet? Income statement and balance sheet are known as primary financial statements. Other things are secondary. We will not prepare statement of cash flows directly. You need help of net income. You need two balance sheets. You need, etc., etc. Okay. So now presented financial statements. Little bit about before really we get into the skin of this. You need to know US business environment. In America, right now, US business environment. So, business is divided into two things. For profit. They are called for profit companies, popularly in America, FP. Then it's not really business when we say not for profit, but still some profit element is there. Not for profit, NFP. Okay. Next, there is a government, etc. We're not going to talk about it. And first of all, for-profit companies are again divided into two. One is issuers. The second one is non-issuers. What is issuers in plain language? They are listed companies, listed or traded companies. Non-issuers are unlisted, not traded, untraded. So, but technical meaning of issuers is those that issue. There are some forms, regulatory filings they do. Those who issue annual report, those who file those annual report, quarterly report with the regulator. So regulator in America, right down here, regulator, financial market regulator is called SEC, Securities Exchange Commission. Securities Exchange Commission. Okay, in India, what we have? Have you all heard? SEBI? No? No? Security Exchange Board of India, which is the regulator of Indian financial markets. Like that, SEC, Security Exchange Commission. Now, these issuers have to issue some filings with SEC. In SEC website, they have to issue, they have to file, they have to publish. For example, it is called Form 10K. Form 10K containing financial statements and audit report. Form 10K in simple format, it's an annual report. There are so many forms they have to file. One among which is interesting for us is Form 10K, which contains the financial statements already and audit report done already, and that is being published, that is being filed. Anyone can look into this. For example, I suggest for you guys to search Form 10K. Any American company, okay? Form 10K, somebody has searched Goldman Sachs, Apple, okay? You see here, Apple, SEC filing. Then when you go to year, latest they have filed in 2025, annual report, you see here, 10K annual report, and you can download in PDF. This is called Form 10K. Of course, Apple is a listed company. What is American stock market? Stock exchange is called what? American Stock Exchange, where it is situated? Hmm? What is the Indian Stock Exchange is called? India. Bombay Stock Exchange, National Stock Exchange. Hmm. In America, these are trading in stock exchange. In America, where is the stock exchange? What is it called popularly? NYSE, New York Stock Exchange. In Wall Street. Hmm. New York, in India we say Dalal Street, Mumbai. Hmm. So in America, New York Stock Exchange, Wall Street. Hmm. And of course, Apple is a listed company and they have to file this annual report, Form 10K, United States Securities and Exchange Commission, Washington, and Apple, their address, there. And when you scroll down here, and you have to, we are only interested. When I start one chapter by another chapter, you have to download around 2 to 3 your favorite American company Form 10K. Which is your favorite American company? Anything? No? Not knowing anything? American market? American US company names. Nike. Okay. Pepsi. PepsiCo. You? Apple. You like Apple? Hmm? Apple. You? Adidas. Hmm. Puma. Yeah, everyone is a shoe company today. Okay. Walmart. Hmm? Forbes. Sorry. Uh, okay. Ford. General Motors. Hmm. And oil companies like Transocean, pharmaceutical companies, Moderna, Pfizer, mm, okay, all these top class companies, the Tesla, SpaceX, Elon Musk companies, Microsoft, Google, Apple. mm, Google is popularly it is called what Alphabet, hmm. Alphabet company. So GE, General Electric, have you heard? Hmm? These are all. Maybe you will be working in some companies. Such companies, they have here. They have their offices, subsidiaries. Goldman Sachs, no, not heard. Goldman Sachs, investment banker, BlackRock. Uh, so I leave it up to you. Just take it. And when you go to item, we are not interested in many things. In order to make your studies interesting, click item 8. Mm. And you see here financial statements. Mm. For example, you click in terms are different, but this is first one is income statement. Mm. Now you see when you scroll down, it's the income statement. Mm. Income statement presented for 3 years. Latest is 2025. Now, when we start analyzing, uh, when we start financial statement analysis, it is you should do little bit like a project. Here we will answer the questions, but you should print this 4 or 5 pages. Go not going green, print it, and whenever I finish one chapter, you go and do calculations, see how these companies are doing in terms of ratios, etc., etc. So with that, you will have a practical knowledge. Okay. Uh, um, Income statement, balance sheet. These are primary financial statements on which we will be telling the stories. Okay. So this is the Main idea. Non-issuers also very big companies. Hmm. Only thing is they are not listed, they are not traded. They are also vast companies are there, they are private. This Elon Musk X, it's a private company, but it's the number one company. He don't want to put it in SEC regulatory. If issuers have to comply with lot of requirements, hmm, compliance costs will be very high. So that is why some companies say no, we are not going to be trading, we are not going to be, yeah, it's their choice. Hmm. Okay, non-issuers. Once we understand, now all our storytelling, all our classes, all your exam questions are based on American multinationals, big corporations, issuers. Definitely, they will not take name of that company in the questions, but practical questions will be around the same scenario. Okay. Now, what is that we are going to start? First, let's list what is inside the section A. Write down section A, financial statement analysis. Let's understand what is inside awaits for you. Let's make a chapter list. Okay. Then we will start. First, always you should know what is inside. I cannot start section A just like that. Okay. Write Roman letter 1. Roman letter 1. Basic financial statement analysis. FSA. I write lot of acronyms. I'm lazy, but I repeat. You have to write full. Basic financial statement analysis. In that, first, vertical analysis, also known as common size analysis. Common size analysis. Second, horizontal analysis, which is also known as common base trend analysis. Common base, there are two names. Okay, that's the first goal. And also we will understand, of course, there's nothing that you should start jumping into numerical questions without concept. Theory should be strong. In your exam, 70% is theory based questions. Calculations means 30% only. Here first, in my classes, like theory, I'll make emphasize on that. First conceptually it should be strong, then any question, whether it is theory, whether it is numerical, you will attack. Okay, it is not like your BCom exam, etc. It is a professional exam. Okay. Second, ratio analysis. Ratio analysis. In that, categories, write down categories. One, liquidity ratios. Second, activity ratios. Activity ratios. Third, solvency ratios, leverage ratios, leverage ratios. 5. Profitability ratios, profitability ratios. C. Management return ratios, management return ratios. 7. Investors return ratios. 8. Market related ratios, market related ratios. These are the 8 categories in that you will be calculating around, let me put 35 ratios. 35 ratios, calculation and interpretation. Calculation and interpretation. Storytelling. That is what is most tested. Calculation is easy. And 35 ratios means 35 numerators, 35 denominators. Okay, I'll send you the list later on. These are all IMA approved numerator and denominator that will be tested in the exam. Of course, I don't want you to memorize them, except maybe 2-3 which you don't know, you should memorize. It's humanly impossible if you remember, try to memorize 35 numerator, 35 denominator, which one I should use in the exam. Exam will be over. There is some common sense, we will understand how those. These are all IMA approved. What is IMA? Institute of Management Accountants, for which will be your member. And IMA Institute of Management Accountants, under that Institute of Certified Management Accountants, that is the exam conducting body. Under that you will get a Certified Management Accountant title. What's your name? Anushka. Kanishka. Kanishka, CMA. You? Mithun, you? Akash. Stalin. Sorry. Michelle. Okay. MI? Okay. Michelle. So, in front of your name, prefix. CMA Michelle. All those things, it will give a lot of things. So, certificate will come like that. Okay. So, that is your parent body, their exam, their approved numerator. Third Roman letter. Special issues. Special issues affecting ratios. In that one. Changes in item. Changes in, sorry, you are not seeing, no? Changes in accounting principles. Second, earnings quality. Earnings persistence. Impact of inflation. Impact of foreign currency. Fluctuations. Six. Foreign currency. Foreign operations. Foreign operations. Consolidation. Okay, etc. All those things we will discuss. Oh my God, this is your section A. Okay. Oh, now I was watching the time. 47 minutes. I have not started your section. Is it clear? Now we are going to start. Okay. Okay, so let's kick start. So what did I say? Already you need not prepare any financial statements. You are going to tell the story. You are going to tell what happened, why behind the story. First thing what we are going to do is a basic analysis, and interpretation of that. Vertical analysis, horizontal analysis, to whom it is useful, etc. etc. Okay, with the numbers, let's understand. For example, this is the question. With this sample, let's understand what is that. Not aligned, no, it's not aligned. Okay, so anyway, this is the question. Anyway, we'll see the answer later on. Okay, you're all seeing these numbers? Yeah? So what is the question now? Using vertical analysis, what is the percentage of cost of goods sold at net income? So vertical analysis. It's not an exam question, it's simple. Just for you to make understand what is vertical analysis. Okay. Now, first of all, vertical analysis of a finance. There are extracts of income statement, not full income statement. Extracts of income statement for the current year, for the last year, they have given you. They want for year one. Later on, we'll exchange knowledge for year two. What is the percentage? Simple. Take the calculator. Take the normal calculator. Don't use the phone. You don't have calculator. Today you are excused. If you don't have calculator, use the phone. I can use the phone. Okay, take, we are in year 1, right? Take this, put 140,600 divided by 194,800 times 100. How much it is? Give in one digit. 140,600 divided by 194,800 into 100. How much it is? 72.17. 72.17. Next, they're asking net income. 31,200 divided by 194,800 times 100. 16%. 16%. Where do you see the answer? A, right? This one. What is so big in this? So vertical analysis means, write down, vertical analysis of income statement. Vertical analysis of income statement. First bullet point. Express all line items of income statement as a percentage of sales. As a percentage of sales. Okay, that is first thing, how you have to do. Okay, now 140,600 divided by 194, we did that, and 31,200, we did that. That is how you should do. So expressing all other items as a percentage of revenue for each year. Write down, for each year. For each year. Next, common size therefore is sales. Common size therefore is sales. Okay, now what is it? Okay, we calculated it. What next? So you do other things now. Don't leave this question. Then we will make analysis. Why behind the numbers? 23,000 divided by 194,800 into 100. 11 point. Now come to year 2. Do same thing. The sales is always 100%, that is common size. Year 2 finished off, tell me, cost of goods sold how much? $60.9. Next item. $16.38. It's not aligning when I'm here. See, I'm here. This. You see that only 2 is showing. Alignment is not there. There was. Okay. Next one. 47,600 divided by, continue. 22 point. So now if you see 61 and 22, here is the year 2. Year 2. Okay. Okay, this is a sample how you construct vertical analysis on published financial statements, basically published income statement and published balance sheet. So when we do vertical analysis on income statement, common size is sales. Sales is always 100%. You express all other items as a percentage of sales. Okay. Okay. So write down sales as a common size is expressed as 100%. Is expressed as 100%. Okay, we'll come back to this. We'll come back to this. A lot of story here. We will discuss. Now, next headline you write down. Vertical analysis on balance sheet Okay. Balance sheet contains what? Anyone? What is the balance sheet equation? What all it contains? Balance sheet equation. Assets and liabilities. That's all. Equity. Total assets must be equal to total liability plus equity. That is a balance sheet. So when we do vertical analysis on balance sheet, for each year, write down, for each year, common size is total assets. Common size is total assets. Which should be expressed as 100%. Next, express all other items as a percentage of total assets. Okay. Now, for example, here they have given you complete balance sheet. Okay, 2 years balance sheet, X3, X4, and complete balance sheet they have given you. Here, total assets and total liabilities and equity. Yeah, so TA must be equal to TL plus E. That's what they have given. Now, what's the question? Based on common size analysis for X3, what is the common size percentage of account receivable and accounts payable? Account receivable and accounts payable. Okay, now take the calculator. X3, 35,486 divided by, what's the asset amount? 35,486 divided by 958,951 into 100. How much? Huh? 3 points Stalin, 3,000. 3.72%. Next, accounts payable, 85,451 divided by 958,951. 8.9. So answer is here 3.7 and 8. I'm just showing how to do it. Then we will talk about what is the importance of this and okay. Now write down last one. Vertical analysis on income statement and balance sheet. Is performed on published financial statements and its main use is for external parties or external users. External users. Who are the external users of any company's financial statements? Government. Then customers, analysts. You and me, we can use it, we can learn it. Scholars, academicians, companies, investors, bankers, lenders, employee unions. Everyone is waiting for companies publish the financial statements. Once it is published, financial analysts will perform vertical analysis. So vertical analysis, you can see it's already published. If you see about Apple, if you go to any financial website, okay, stock market 5, and if you click Apple Corporation, so right now Apple share prices are going up and down. US market is open. Our evening time is American morning time. Now US market is open. You see the changes are happening. Now, what analysts will do, all these ratios you will study later on. Apple's market capitalization, their market value is 4.9 trillion, and they have done so much analysis here. If you click analysis here, you see they have done number of analyst firms. 27 analyst firms are analyzing these numbers. Their published financial statements they will extract, and then they do vertical analysis and publish to the users. And there are so many ratios. All these ratios you will learn in the 35 ratios. You will learn all these things. We are just baby started now, baby steps only. Statistics, all these ratios you will learn later on. These are all vertical analysis. Okay, so what they do, they take the financials, whatever it is in public domain, they will take all those. You see here, it's all same thing what we saw in SEC. 2025 revenue is $416 billion. See, they have taken many years data and they have extracted this data and then they are doing analysis. You see, so mainly vertical analysis is done for our purpose. Anyone can see external use. Underline external. Underline external. Okay, from time to time you have to come and see. There is a financial website called Money Control. Money Control is there. Then Mint is there. Economic Times is there. Financial Times is there. You have to go there from time to time. This exam, you will enjoy learning only with the practical things like this. Don't limit yourself to only textbooks. Now, this is the thing. Now, let's get back. Okay, we did this vertical analysis. What's the use now? Calculation is one aspect, but how we can tell the story now? What happened in this company? We don't know. We don't know anything about this company. There is no background. What this Charleston Inc. will do, but still we can speak. From year 1 to year 2, if you see the numbers here, cost of goods sold, operating expenses is also known as non-manufacturing. So cost of goods sold is manufacturing, of course. And net income is bottom line, sales is the top line. With these 4 ratios, 4 percentages, we can talk, we can tell the story. As an analyst, you can tell the story now. But what you should not be doing, typing in the exam nowadays, everything is a pre-formatted, everything drop down menu. But you should not tell the story about the numbers which is already there. You should tell behind the numbers. Don't tell me, sir, cost of goods sold decreased from 72% to 61%. You should not say that. You are wasting time. Are you all understanding? Everyone is seeing this. Your slide, they are seeing it. And what is the use of talking about same thing? We should not. What is sales minus cost of goods sold? What is sales minus cost of goods sold? What is it called? Hello. Sales minus cost of goods sold. What is it called? If you deduct cost of goods sold from sales, what profit? No. Sales minus cost of goods sold. What type of profit it is? Is the term gross profit. Gross profit. Net income is the last one. So 100% minus, right down. Year one gross profit. Right down. Make like this. Year 2, year 1. Year 2, year 1. Right? We have these numbers. You have these numbers. Write down. Year 2, cost of goods sold, rounded off, 61%. Write down in the textbook. Cost of goods sold, make 2 columns, year 2, year 1. We are in year 2 now. Cost of goods sold, 61%. Gross profit, gross profit is sales minus cost of goods sold. 100 minus 61, how much? 39%, right now. Gross profit is 39%. We are in year 2, right? Next, write down operating expenses in bracket non-manufacturing expenses, 16%. Next, net income, 23%. Now come to year 1. Against 62%, write down 61%, write down cost of goods sold, 72%. Only numbers. 72% rounded off. Gross profit is how much then? What's the percentage? 100 minus 72? 28. Write down 28. Next. Operating expenses, 12%. Net income, 60%. Okay. Now closely when you look into these numbers, now you should be a storyteller now. What happened in this company from year 1 to year 2? Don't just tell me percentage, come down, went up, etc., etc. Why gross profit went up in year 2? Why behind the story we need? I'll give you 2 minutes. Don't be shy. Have a look into numbers. Don't tell me the numbers. I have given you numbers. You know the numbers. Why gross profit increase in year 2? Why operating expenses in general debate? We don't know about anything in this company. Have a look into. Don't be shy. Whatever you want to speak, speak. Online people write what happened. Type. You are having 4 numbers here, 4 numbers there. Just try. I will help you. Calculation we did it, but we need to tell why. Cost of goods sold has come down, gross profit has increased. How come? How they might have achieved this? Are you all from commerce background? Become commerce. Study. Yeah. Okay, don't tell me 70 to 60%. What are those? Okay, Abhyukta, that's what we are asking. How they reduce the manufacturing cost? What steps they would have taken? I can speak for 5 minutes, but I'm allowing you to think. Manufacturing company background is not there. Common reason. Only Abhyukta is active. Others, suppose your company, you are the CEO of this company. You are seeing these beautiful results. That means some action you might have taken. Little bit loud. Yeah. Okay. Why it happened? Very good, Riddhi. Ah, by managing material waste, they reduce the waste material in the plant. That's why cost of goods. One of the reason cost of goods sold has come down, and gross profit has increased is because material wastage they reduced. Yeah, very good. Next, material wastage in the plant they reduced. Possible. Yes. Next, maybe they negotiated better material rates with the vendors. Maybe they negotiated better wage rates. And direct labor wage rates might have come down. Material cost might have come down. Material usage might have come down. Waste might have come down. Superb, Riddhi. Electricity bill, the power consumption might have come down. Nobody is telling me one beautiful example why it has come down. Maybe automation. Automation. Last year they were doing manually. Now they introduced the automation. Now robots they are doing it, increasing the efficiency, cutting down the waste. Yeah, changing the machines instead of employees. Correct. See how many points we got? Write down. Write down. Possible reasons. Possible reason. for gross profit increase in bracket cost of goods sold reduction close bracket include reduction in material prices and direct labor wage rates next less wastage of materials less wastage of materials next introducing automation over manual processes next reduction in utility bills in bracket consumption of water gas gas and electricity this might have happened. See, we talked about 5 minutes now. We don't know about this company, but general reason are these things only. But now, question to you. Okay, we said okay. Last year they were in manual process. This year they went into automation. So basically, efficiency increased, cost of goods sold came down, gross profit increased. But who introduces automation? That who introduces automation? Engineers, design engineers, automation engineers, right? R&D people. All these expenses have increased. If you see, in year two, non-manufacturing expenses are increased, no? From 12% to 16%. That is why it is possible. Company hired a lot of brains, technical brains, design engineers, innovation engineers, automation engineers, and they paid them. So from 12% to 16% it increased, but it's good. These people went into the plant, they saw manual process, they removed everything and they put the new. So in order for cost of goods sold to reduce, little bit increase in non-manufacturing expenses is important, right? In order to introduce automation and production efficiency, organizations increases non-manufacturing expenses such as R&D. R&D means R&D, research and development, comma, innovation, and design engineers in the initial years. So, not every year, not every year. Some initial years they will increase. They will hire a lot of these people and who will go and work in the plant, remove all this obsolete technology, bring the new technology, help to increase the production efficiency and therefore reducing cost of goods sold, increasing gross profit. You need all these people. You cannot just wish, okay, I want to reduce cost of goods sold. How it will reduce? You don't want to spend money on engineers, non-manufacturing expenses? You should. So until it stabilizes, company increases the operating expenses or non-manufacturing expenses, then only it is possible. You cannot say, no, I'm not going to increase non-manufacturing. I'm not going to spend money on R&D people. I'm not going to spend money on design people. Then cost of goods sold will not come down. You see, for the last 12 minutes, we talked about this. This is called the art of storytelling. As a management accountant, when you present these numbers, you should not speak about like this. Our cost of goods sold has decreased from 72% to 60%, sir. No, already your sir is watching that. Ma'am is watching that. You should tell this is what we have done during the year. That is why reasons include in companies actual reasons will be there. What we talked about here is no background, nothing. We talked about just the general issues. Okay, so we'll take break now and then we'll start horizontal analysis. You have that question line? Okay. We'll do it later. Okay, 10 minutes break. Break time. She's reading the graduation. Done. It's the big of share. Big of share. Big of share. That's it. That's it. Resume. Next one, horizontal analysis. Horizontal analysis. First point, also known as common base analysis or trend analysis is performed on both income statement and balance sheet. Next, generally this analysis is done for multi-periods, full stop. Generally, next bullet point. Generally, year one is chosen as base year Next bullet point. For the chosen base year, all the items in income statement or balance sheet are are expressed as 100%. Next bullet point. Next periods items are expressed as a percentage of base year items. Last point. This analysis is done for internal management purpose and generally kept as, generally kept as confidential. Confidential. Okay. So that means these are not published. Okay. Now, how to do that? For example, you see, the moment you see the questions more than 1 year data, that means it is horizontal analysis. Okay. In vertical analysis, you saw what? Only 2 years? 2 years published. Here you see 4 years, 5 years, 10 years. But in the exam, generally they limit to 4 years. Okay, what is the question? Always read the last sentence. If year 1 is the base year, if year 1 is the base year, this is base year. What is the percentage increase in net income from year 2 to year 4? Year 2 to year 4. So now what you should do? They are asking net income, will concentrate on net income. But imagine entire income statement items, base year, you should close your eyes and put 100% for all items. In vertical analysis, what we do? Only sales we put it as 100%. All other items we express as the percentage of sales. Here, all items in that chosen base year, you put 100%. Now take the calculator. Let's concentrate on net income. Year 2 on year 1. Net income. Year 2 on year 1. 84 divided by 80 into 100. Build the trend now. How much? 105 percentage. Next, year 3 on year 1. 86 divided by 80 into 100. 107. Anyway, mind you, year 1 is 100%. Next, year 4 on year 1. 110. 110. 110. Right? Now, what is the question now? From year 2 to year 4, what is the increase? Year 2 was 105. Year 4 is 110. What is the increase? 5%. Got it. If they ask you increase from year 1 to year 4, what's the answer? 10. Year 4 is 110. Year 1 is always 100. Year 1 is always 100. So they will ask you like that. Year 2 to year 4, how much? It went up from 105 to 110. Why it is called a trend analysis? Companies prepare a trend. Like a net income now 100, 105, 107, 110. If they make a line chart, it will go like this, it will go like this, it will go like this, correct? That is called building a trend over the years. Riddhi, understanding? Vishwa, Tanmay, Shweta, Swati, Sanjay, Rameshri, Chaudeshwari, Abhyakta, Lokesh, Ananya, Understanding? Now, can you all do one thing? Go and do same thing for sales. Sales. Now, just tell me the numbers, okay? Year 1 is 100%. Now, you start. Online, type it. Tanmay, type it. Build a trend of sales. Year 2 on year 1, year 3 on year 1, year 4 on year 1. Ready? Done? Okay, tell me percentage. Year 2, 10 point. Okay, 105. 111. Leave point. 111. 114. Okay. Now, same question. What is the percentage increase in sales from year 2 to year 4? 9. Year 2 to year 4. 114 minus 105, 9% increase. So now sales increased by 9% from year 2 to year 4. Net income increased by 5% from year 2 to. Now this is called building a trend. Here also you can see upward trend. 100, 105, 111, 114, like that. For your exam questions, always year 1 is the base year. But in practical world, it can be anything. It is a management which will decide. Maybe year 2, maybe year 3. If they choose year 3, you should put year 3 100, 100, 100. And year 2 on year 3, year 1 on year 3, reverse you should do. So that will below 100% it will be. In practical world, when you become finance manager, this is a simple trend analysis. People will laugh at you. What is this? Year 1 he is taking base year. Why year 1 is always bad? Company's operations might have started maybe 9 months only in year 1. Correct? Not exactly from January 1. New company. So year 1, not necessarily 12 months. So maybe in year 2, it got stabilized. So year 2, they will take the base. Possible. Practical world, you need to decide. Your CEO and you need to decide, okay, which year is the best. When we started in full capacity, which year? Then management will decide. Okay, now in this question, under horizontal analysis, changes in net income for Q1, year 2, year 3, year 4 will be how much? Net income. Changes in year 2, 3, 4 will be how much? Did they give you any base year? Did they give any base year? No. Correct? In this question, they gave you base year, year 1. In this question, do you see any base year? No. So then how to do it? Okay, just like previous question. This is where you will make a mistake. When in the question they will not say you any year 1 as a base year. What you should do? Yeah. Year 2 on year 1. Okay. Year 3 on year 2. Year 4 on year 3 you should take. This is called year on year base. YOY. So what you should do? 98.2 divided by 95, how much? 10.3. Sure, 2 digits, how much? Check. 98.2 divided by 95 into 100. One or 3.36, right? 37. Now do one thing. Year 3 on year 2 you do. 104 divided by 98.2. 105.91. Okay. Next, year 4 on year 3. 101.8 divided by 104. 97.88. And always year 1 is 100. Understood now? Year on year base. What we did now? Year 2 number divided by year 1. Year 3 number divided by year 2. Year 4 number divided by year 3 number. But what they're asking here? Changes. Changes means always from deduct 100%. So year 2, year 3, year 4 changes minus 100. 3.37 minus 100%. 5.91 percentage. How much is this one? Negative, no? 97.88 minus 100. 2 point. Which is the answer? Here. This is little bit different trend analysis. And again, for your exam purpose, you should deduct always from 100%. But in my career, we never did this. What we did here in year 1, what we used to do? Year 3, 105, right? 105.91 minus 103.37. That's the practical world. 97.88 minus 105.9. For theory purpose, exam purpose, write down. Year on year basis. Year on year base. Yeah, year on year base. In bracket, you write down YOY. All capital letters. YOY. Is built when there is no specific mention of chosen base year. chosen base year. Okay, this is a sample. Always, no, I need not explain again. You need not write year to 1 year. For example, write a example. For example, any item of income statement. Any item of income statement. Year 2 and year 1. Like this you write. Year 2 divided by year 1, comma, year 3 on year 2, etc. Okay, so be careful. Especially this type they will ask. This type they will ask. So now I'll ask you one question. For this question, you can do other things, operating expense, sales, etc. Similarly, you can do it. Now this is net income. Net income, these are the percentages. Okay, we are in horizontal analysis. Now, if we are doing on this same question on vertical analysis, what we do? Sales will be 100%, correct? Yes. So now year 1 net income 95 divided by 2012, how much? 95 divided by 2012 into 100. Sales is 100%, correct? Now tell me, 95 divided by 2012 into 100, 4.7. Next, 98.2 divided by 2778 into 100. 3.5. Are you all getting it? Next, 104 divided by 3065. Michelle, getting it? 103.39. It's getting cold there. Here 4, 101.8 divided by 3205. 3.1. Now, my dear friends, what you should not be doing in the exam. Now, for example, year 2, I am highlighting this. This is vertical analysis, this is horizontal analysis, percentages, correct? You should not be confusing in the exam in case-based questions, mixing these and talk, because it doesn't make sense at all. Because vertical analysis is based on percentage of sales. It is for different purpose, external use. And if you see in horizontal percentage, these percentages you see, year 2 always 100%. But in vertical analysis, we are telling 4.7. Here we are telling 103.37, but here we are only telling 3.5%. Are you all getting it? Here 105. Oh, what is this? Same net income. We are telling too much here, very less here, a lot of confusion. understand one thing. As an analyst, this purpose is different, that purpose is different. We should not be mixing our thoughts. Under horizontal analysis, net income year 2 increased by 3.3%. But in year 2, 3.5% is on sales. Year 2, year 1, we are comparing net income only. Are you all understanding? Net income 98.2 divided by 95, we are doing. Actually, formulas are different, purpose is different. Many students go wrong here. Earlier in essay questions, now at least in case-based test questions, there is a pre-existing format. You will not do mistakes. But in the exam, they will confuse you. When you are commenting on vertical analysis, you should limit to that. You should not confuse with yourself with the horizontal analysis, because here the purpose is vertical analysis. The purpose is for external analysis. This is confidential. Horizontal is confidential, and even the methodology is different. In horizontal analysis, we are not comparing to sales at all. Yes, operating expenses, net income, we are not divided by sales. That is vertical analysis. When the method is different, when the formulas are different. Oh, here 103.37, here it is only 3.5. Such questions itself is wrong. Many candidates go wrong here because you are trying to compare apple to orange. You should stick to one. When you are studying, very, very important this. What is this in the textbook they are talking here? Talking here is different, talking there is different. The formulas are different, the basis is different. Should not be. Okay. Next. This one we did it. Now, go ahead, do it. Easy question. So that's it. Year 1 is 1000. Yeah. Year 2 is 1920. Yes. 1920 divided by 1000. Right. 1000 is always 100%. So 192. Answer is 192. Year 3 will be 189. Correct? Yes, getting it. Base year is 1, year 1. Boss, got it? Do 1920 divided by 1000. That's it. Into 100. Year 1, 1000. Okay. And percentage is 100, no? Year 2, 1920. 1920 divided by this, and in percentage direct minus, it will be 192. Yes. If year 1 is the base year, what is the percentage increase in sales revenue from year 1 to year 3? Yes, 12. What? These two boys struggling. Got it? Just help him. Help him. Turn. Help him. He got it. You got it? 12%. Okay. Sales revenue, right? This is 100%. Year 2 on year 1, year 3 on year 1, and 232 divided by 202, 208, right? Correct? 232 divided by 208 is 112. Yes? 15. Okay, so 12% minus 100%. 12%. Okay. Similarly, net income, etc. So trend you build it. Online people getting it? Tanmay, Yogesh. Now, okay, you have year 1 numbers, year 2 numbers. Remove, for your easy purpose, remove last 3 zeros in the calculator. Okay. Financial analyst is able to conclude that the competitors. Okay. Now, first, I'm zooming this answers. Okay. You are nearby. Can you take the photo? You are you all in the group? They created the group. No. You are in the group. Take the photos. Share it in the group. You are in the group. Why? Today. Bala said good or bad. Huh? After that we'll pay, right? Not good. Not good. Okay, shared it. You're not in the group, Riddhi. Check with your coordinator. Okay. Are you all seeing this? She sent this screenshot in the group. Because if I cannot zoom so much. Abhyukta, these are my sums. Okay, my database. You have a book, you have a database already. They gave you question bank. Not it now. You got it or no? Our official partner is Hawk International. Hawk International, you will get the questions. That is different questions. Okay. These are all my training questions. Similar questions will be there in Hawk. Okay. Okay. Now you have the answers. What is the answer now? Look at the numbers. First, pay attention to ABCD. What they are talking in A? Common base year income statement show selling expenses they are talking. So now selling expense increased by 14%. Check that. Common base. Selling expense how much? Here 100%. 40 divided by 35 how much? 40 divided by 35 into 100, 42.5. So they are telling 14%. So it is wrong. Yes. Common size show taxes to operation at 16% for year T. Okay, common size means vertical analysis in year 2. Tax is how much? 3.5 divided by 275, very less. Correct now? It cannot be 16%. Yeah, it cannot be. Common base again. Show that gross profit increased by so much in year 2. Gross profit is 100% in year 1. 115 divided by 95 how much? Into 100. 1 to 1 is 21%. They are telling 17%. So now that is also not correct. So answer must be D. Let's see. Common size operating income before tax at 22% of year 2. Common size operating before income taxes 25 divided by 275 into 100 how much? Somewhere all are wrong. First statement is right. That's what I got. Somebody told wrong, no? Okay, this is wrong now. Everything cannot be wrong. Let's go back. Common base selling expense increased by 14%. What happened? Selling expense 40 divided by 35. 14.2. Yeah. So A is correct. Why Michelle said wrong? A is correct. No? 40 divided by 35. First option. Yeah, correct. See, such questions also will come. So you have to test A, B, C, D, and they are confusing you with a common base, common size. Immediately your mind shift attention. Common size means sales as 100% for that. Common base means year 1 is 100% all items. Now let's enjoy. Come on. First, now I want you to do. I'm zooming it. Take your time. Your time starts now. Okay. Do common base analysis first. Come on. I need in your notebooks only percentages. Okay. Put year 1, year 2. Do common base and only write here sales, cost of goods sold like that. Left side, these headers, year 2, year 1. Year 1, year 2, sorry. Only percentages. Only common base. Common base you do. Common base, year 1, all items 100%. Year 2, express that. Did it? Year 1, 100%. All items year 1, 100%, right? This is year 2. Yes? Yes, this is year 2. Year 2, year 1. Take this pic, send it to group. Numbers are correct, no? You expressed 275 divided by 250, like that you did, right? Huh? 160 divided by 155. Okay. Take that pic, send it in the group. Done? Now, perform vertical analysis. Come on. First one, what you did is now common base, horizontal. Now, common side. Vertically. In vertical, what we should do? Year 1, sales only 100%. Year 2, sales only 100%. Now I express, make 2 columns again. In year 1, 155 divided by 250, 95 divided by 250. Go ahead, Abhita, go ahead. Go ahead. Yes, it's okay. You can take part 2 first. And always it is a better strategy. Yes, you can do that. Not necessary. Not necessary. Where are you based, Abhita? Bangalore, Chennai, Tamil Nadu, Kerala, Coimbatore. Studying BCom. Completed UG. Then come to Bangalore, no. Come to Bangalore, stay here, you'll finish CMA. Come here for 2 months. It's okay. All these are investment. You should not think it as expenses. Lot of difference between thinking about expenses and investing in it. It's up to you. It's up to you. Done. Done. Yeah. Put always percentages. Percentage. Then take photo. You are in the group. What is that thing? No, we are not calculated. I think we are not calculated. Calculate. Put 2 columns. Take the photo. Send it. Cross check each other. Read year 1 percentages. Okay, continue. Listen, everyone. 6. Correct? Next, year 2.
41.81, 14.54, 18.18, 9.09, 1.27, 7.81.
Very good. Either you or you take the photo, send it. This is called self-service in my class. Correct? Study. Why I should do? You should do. Okay. Using common sized income statement. Year to net income, how much? Year to net income, how much? What's percentage? She sent it in the group. Riddhi, are you not in the group? Okay. Year to net income percentage. 7.81. What is so big in that, Nidhi? 21,500 divided by 270. Using common size. Common size means what? Vertical or horizontal? Vertical. Did the operating income and net income increase or decrease? So concentrate on operating income, net income, year 1, year 2. In year 2, it increased or decreased? By what percentage? Operating income, what happened from year 1 to year 2? Vertical analysis. I think here it is 50%, no? And 600 by 1,300, how much? 46 point. So it decreased. Yeah. Net income 12%. 180 divided by 1,300. It increased. So answer is A. Right? Decreased or increased. Now my question to all of you: how when operating income is decreased, net income is increasing? What can be the reason? There must be something, right? Huh? Simple answer, you should tell me, sir, common size is big. Correct, no? 1,300 you are dividing always, right? When the denominator is high, numbers look same. You see, depreciation 200, interest 100, income tax expense 80 to 120. But when we talk about it, 180 divided by 1,300, like that it increases, the percentage increases. And 600 divided by 1,300, denominator is high, so it decreases. It's all matter of mathematics, simple mathematics, but meaningful discussion. Okay. Based on the above information, common size balance sheet for the company will show. Common size means vertical. And these are balance sheet items. Test one by one. Remove last three zeros. Don't take too much zeros in your calculator. Which statement is correct? Common size, vertical, balance sheet. In balance sheet, what item is 100%? Assets. So everything you should express on assets. 495 will be your denominator. Check one by one. A, AR 24%. That is the correct sentence. All others you checked. You checked. Check. As a percentage of total assets divided by 495, whatever they are talking. A. Right? Checked all. Online people getting it? Option. Now, last question. Which one of the following statement is correct? Okay, you have the data. Year 1, 2, unit sales, unit selling price, gross profit percentage. They have already calculated. Which is correct? Try. Check each statement. Option C. C. Dollar amount of gross profit increased by 3%. Dollar amount. Hmm? First, let's get dollar amount of gross profit. How? They sold 1000 into 50, and in that 45% is the gross profit dollar, right? Calculate 1000 times 50 times 45. How much? 22. I know. 1200 times 55 times 48%. 31. What's the difference? 9,180. 9,180 on 22,500. 40%, no? Are you getting it? I'm just confusing you, but be careful. Dollar amount they are talking, not gross profit. They know you will tell 48 minus 45. Which is correct then. Hmm. Cost per unit sold decreased 3%. Where is the cost per unit? Cost per unit, how do you get it? If gross profit is 45%, cost is how much? 55%, right? Hello. Sales minus cost of goods sold is gross profit, right? Yes. They are given you 45% gross profit, 100% sales. Cost is how much then? 55%. 55% of 50, how much? That is unit cost. 50 into 55%, how much? Calculate 50 times 55%. Huh? 50 times 55%. 27.5. 48. 100 minus 48 is 52. Yes. 52 is the cost, right? Hello. 55 into 52%. 28.6. Yeah. Cost per unit sold decreased by 3. Now what is the decrease? No, it is increased actually. Answer is not here. Now here what is the increase here? Increase how much? 1.1 1.1%. Cost per unit increased in 1.1%. Yeah, Abhita. In line with the increase in unit sales. Increase in unit sales is how much? 1000, 1200, 200, right? 200 divided by 1000, 20%. So I think here, let's see, percentage increase in sales price. Sales price percentage increase how much? 55 minus 55, no? 5 divided by 50? 10%. 10%, correct? So 10% more than 1.1%. Answer is B. Good question. Yes, confused? You have to get per unit like that. They're not asking 48 minus 45. Challenging. Understood this last one? No? Percentage increase in selling price. Selling price in year 1 was how much? 50. Year 2, 55. Difference is 5. 5 divided by 50, 10%. Yes? Right? What is the year 1 cost per unit? 27.5. Year 2 cost? 28.6. Difference how much? 1.1. 1.1 divided by 27.5, how much? Into 100. 4%. So 10% more than 4%, correct? Answer is D. Very good question. 1.1 increase, Abhyukta, not 1.1 percentage. It's a 4% increase. All of you understood this question? Beautiful question. Most probably what you will do in the mistake in a hurry? Oh, 48, 45, 3%. Answer is C. Bala sir, I did correct, you say. Unfortunately, this is the simple and costly mistakes. Percentage increase in the selling price. 55 minus 50 is more than percentage increase in cost per unit. Cost per unit, selling price per unit. There are. This is a challenging question. Out of all the things what we did today, this is the best question. So this is basic analysis, basic analysis, vertical analysis, horizontal analysis. Enjoyed? Not enjoyed? Huh? Not enjoyed, huh? Not enjoyed session. Any question? Basic. I'll send one some write up. Basic. So where it is there, I'll send it. Shall you have can we show them how? You'll be getting this question bank. I will just demonstrate. Just show you what are these things. Okay. Once you get it from ArivuPro, start working on it. Riddhi, you have to, I don't know how they buy book here. App, how do you buy it? Reception. Oh, okay. Riddhi, I think first through app you have to pay, I think. What is that? What? Right. What is this helpline, man? Help at ArivuPro. Oh, tomorrow. Yeah, inquire. They will send you payment link. You pay and always buy the book. It is better. Come tomorrow, collect the book and stay here, okay? Until the class. Riddhi. So you are in Bangalore, right? Yeah, come. So Bangalore, so you can become friends here. You can work together. Today you just understood what is Bala, sir. Tomorrow you come, okay? Correct? I know what is in your mind. Okay, guys, this is as what you might have seen. You have to log in, go to CMA part 2. Okay, now we are in CMA part 2. And in here, Hawk International is our study learning provider. Okay, And we are in section A. Click section A. Okay, look, all these chapters I have mentioned. You have to follow my sequence and go to that chapter. This sequence is different and my way of sequence is different. Okay? And now, whatever I told you, each author is different. They will write the same thing but in a different way. And all the chapters you have here, section content. You can read the online text, better you buy the textbook. So you feel the textbook. Buy the textbook, read that, and here you go, for example, click this comparative. I said basic financial, now this fellow says comparative. And open textbooks, you can read it here only, but better you buy the book. Now, this is a video and all, don't watch. Practice questions, right? Here, you click this and you get total 18 questions are there. You can select, or all of you are watching, you can select, for example, this is a bag. You can, let's say, 5 questions, and then say start. You see, hey, same question what we did now. Some are same questions. Okay, what was the answer? Remember, selling expense, no? Yeah, selling expense 14%. Yes, selling expense. You said B. Okay, and when you click B, you can, when you are learning, you can click the answer C. See, when it is green, oh, answer correctly. Okay, and they will give you all the explanation. For incorrect, correct, he gives you all the explanation. Now with the smiling face, go to next one. Now, using horizontal analysis, which account has the largest percentage change? Leave last 3 zeros, leave last 3 zeros. Horizontal analysis. Which is having largest section, largest percentage? Horizontal means previous year 100%. Sales, take 6,600 divided by 6,000. 110%. Yes, write down 110%. Sales 110%. Net income 540 divided by 500. Into 100. How much? Write down. Okay. Next, I think it is 5%. Check. 10,500 divided by 10,000. 105, no? 105. Next. Inventory, don't worry because it is decreased. So answer is, highest is what? Sales. Oh, I'm right or wrong. Double check before you see the answer. Let's go. We are correct. Oh man, what happened? I purposely did it. Oh, what happened? It's telling wrong. Inventory, what percentage it has come down? 500 divided by 600. Huh? 500 divided by 600. 83? 500 divided by 600. No. In the first one, 110 means 110 minus 110. Here 83, it cannot be. What happened? 500 divided by 600. 83. 83 minus 100? 17. So, yeah, 16. So, largest change is in negative. Inventory. See, that's why you should be careful. Now here, BISB should expect selling and administration expenses in year 2 to be what they are telling? The question mark is there in selling operating income. BISB estimates that the units sold will increase by 5% in year 2 with no price increase to its customers and no anticipated cost increases from its vendors. Assume selling and administration are 5% variable and 95% fixed. If all predictions materialize, you should expect selling and administration in year 2 to be, what's the answer? Selling and administration 5% variable, 95% fixed. 5% on 100, 5%. So, how much it will be? Not understand. Okay, now, what's the best guess? Last year it is 40%. If they do these changes, what happens? Take guess now. Take guess, best guess. Try. Go for it. Hmm? Try. Hmm? 40 only? Last year it was 40. And units sold will increase by 5% in year 2. And variable selling also will increase. Tell me one answer, maybe wrong, maybe right. Abekta telling D. You are telling D. Okay, let's see. Hmm? Again, denominator, bro. Denominator. When unit sales will go up, denominator will be high, like the tuition. So it will be less than 40%. Hmm? And he has done with some examples. You need to understand that examples. I don't want you to do, I'm just demonstrating today. Okay. Next. Denominator Abhita. When unit sales increase, what happens? The denominator will increase, right? Hmm? Yes or no? Tell me yes, no. When the denominator increases, selling and expenses percentage will come down. That's right. In financial statement, expressing all financial statement items as a percentage of base year is called base year. Simple. Right now we did common base. What is it called? Horizontal trend. Horizontal trend. Okay. I think we answered this, no? Scheme, no? Yes? Account receivable? Yeah. Abhita, did I answer your questions now? You see, you said, sir, from where you are getting questions? My questions are common. Some will be here, some will be there. So I don't solve questions on only one. Okay, so my questions are common. So end the session. I'm just demonstrating end. Oh my God. You're all 3 out of 5 correct. 60%. So like that, it keeps a track, and again it will show you where you went wrong and examples. And later on, when you keep on working like this, there is a session history, etc. No, in session history and all, it keeps on accumulating it. Okay, this is what I just wanted to show. Don't discuss with me your commercial terms with the institute. I'm really not, I don't have time for all those things. I'm not into it. Whatever your payment, etc., deal with them. Get the textbook, get this access, and if you delay it, my train will be moving. You'll be falling behind in the previous station. So you should get and start practicing now. There are 18 questions are there. Today's chapter, there is 18 questions. Tomorrow when I meet you, we will start the first set of ratios, that is liquidity ratios. Okay, I'm closing now. Okay, so it is to make sure you have everything next class, so it will be easy for you to go to log out. Log out.
Sorry to disturb. When is the second over?
No, I want you to show me the new system.
System.
Okay, now I have to take attendance.
Yes. In the browser. I'll make sure it is always open here.
He opened it.
He opened it. It's not here.
Maybe another.
No, it's open.
It's not recorded my music.
No, you'll have to check in and then you'll have to take attendance. It's part of the sorry, email ID.
Secure.
No, I disconnected permissions. I disconnected.
Pause.
No, no need to pass. I disconnected it. They edited or even not basic.
Sometimes it is.
Password is password. All lowercase. Second. Yes. Yes, your class is today, right? Yeah. Open. I have everything. I already checked in. Okay, then you can talk start after the session. Once again, connect this.
Where's the attendance?
It'll be here. They can scan the screen.
Okay. If you want to scan, online people scan it.
A lot of online student system.
Hmm?
A lot of online student system.
Yeah.
We have used, right?
Some they will come. Scan it. They know how to.
They know the same way. This time it's not even that complicated. They just scan with their APID market. Yes, 1%, yeah, you can see.
Means others are not.
Yeah, they.
Come on, guys, scan it. How they're asking?
They have to scan it. They'll get a link.
How? Tell them.
Unable to take screenshot. You don't have to take a screenshot. You can just scan this. You'll get a link. Open it. Enter your API ID, and then you can be able to mark your attendance. You don't have to take screenshot. Please don't.
Tell the chefs loudly. Let them.
I have logged through phone app. Use some other phone to scan the QR. You don't have to take screenshot. Who's that? Abhyakta. One, 2, 3, 4, 5, 6, 7, 8, 9, 11, 12, 13, 14, 16. Oh, 16 only 9. Yes, the class is over today. Everyone here mark their attendance? Who? Not able to. You came for demo case. You? Why? You took admission? When did you take admission? Then you would have gotten a mail, right? Demo class. Update, okay. It still hasn't. Kanishka is not even here. Ramchandra is also not. Grishma. Who? Your API ID is 10245, right? 0245. Swati. Scan.
So admission of me, specific results. Way ambiguous and uncertain is not an admission. I think I may owe someone something. It's not a valid admission. I ordered to that. It's good. Is this clear? Is this clear?
Why?
QR is expired.
Try again.
Admission, can we use that? Use it? Yes or no? Court can accept some admission and reject, others will not. Is this clear? Is this clear? Now look at that question. Can you see this? What is it? Every admission is an, but every admission is not. Every confession is not defined by this. It includes admission as a special. Okay. Now, where is confession?
Yes, 11.
What are the six conditions?
Abhyakta mark.
Can you see this? Can you see this? Now, everyone is
Who's still pending? Anupama is not here. Ananya. She hasn't marked. Akash. Yeah. Still haven't marked. You still haven't marked your attendance. Akash Tirumalai, right? Sorry? Oh, it's different one then. Jana Harshini? Not here. Sanjay? No. Jeevan Raj?
coercion promise. By coercion.
Sorry? Yeah, after that you'll have to close that. One person, if you want, you can ask them. It says I could not mark attendance. Ananya or
Lady?
yeah, you can. Then who else? Abir. Abhyakta, you're not on the list. You'll have to send a mail. You won't have attendance today, actually. Yes, you'll have to send a mail. Yes, that's it. And Abhyakta, please send a mail to help@arivupro.com. Thank you.
Yes, the night belongs to me. It says, A says, I will be with this night. It says, admitting committing the. So confession must admit all, but substantially all the facts of the. This is the biggest difference between admission and official powers. There is threat of the power. And that problem says the law. This is now what are the six conditions for manifestation? Number one must be a made by everyone. I have she confessed that yes, I know no vision. No, this is legal name. No one else can confess. Only the person who has committed the offense will confess. Number three, whom you will this confession? Registered or person in authority. It must be caused by inducement, where proposal or the inducement, where promise was related to the criminal. It must make the must be either confess bring some benefit or they start. They say, hey, I could tell that you have done it. Yes, it's a passion. It says that there is something in the okay. And why do they give them trust? So that they should say yes. Confession.